Hello and welcome to another episode of Perspectives. I'm Phil Gioia, Client Portfolio Manager here at DoubleLine, and today I'm joined by Stephan Diaz Ellinghaus, Specialist on our asset-backed security team. Stephan, thanks for joining the show today.
Thanks for having me.
So I brought Stephan on today because you and I recently wrote a white paper titled Securitizing the Digital Present and Future. And really that paper focused on data center ABS and just the growth that we've seen in that market. And since we published that paper in October, we've had several clients reach out asking us about the opportunity sets of that market, because I think they, like you and I, realize the importance of data centers in our everyday lives, right? Things like messaging and email, but also some of these emerging applications like artificial intelligence and machine learning. But Stephan, before we get into the investment opportunity, perhaps we could just take a step back, and for our viewers that aren't as familiar with data centers, maybe just describe what a data center is.
So yeah, it's an exciting growing area, and the data center at its core is infrastructure that stores, processes, transmits data. And you mentioned some of the applications. One of the driving applications for the growth in the space is AI and machine learning, which is very compute intensive and very power intensive. And then in addition to that, for a data center, you need good network connectivity, you need cooling technology, and you need power, lots and lots of power. So we'll talk a little bit about that too. The ecosystem of players has changed and evolved a little bit over time. What you see is you have the owner-operators of data centers, which are third parties that then lease the space and the services to the tenants. And the tenants are the basically users of the applications. The entities are the players that use the servers and the routers and the switches in the data center. And so there's a couple of different type of players and tenants, right? We know of the hyperscalers, which are, as the name suggests, the kind of hyper users of data, Amazon, Microsoft, Google, and then everyone else, enterprises from like Boeing to DoubleLine and everyone else that still uses data and uses data centers for the service. Perhaps one last thing I'll say is that data center industry has also emerged as a mission critical industry that I liken to utilities now, right? Like when we go home or when we come into the office, we need to turn on the lights, we need to be able to run water, we need to be able to regulate the temperature in the building, and we want to be able to receive and send data. So it's become this mission critical utility-like industry that is continuing to grow.
Yeah, I would say sometimes, the water in the office isn't as important as receiving or sending emails.
That's right.
Right?
That's right.
You want to make sure your Teams is working.
Yeah,
right?
you think about the importance of it. It's not only like streaming Netflix, right? Every business application requires data. Just every utility application requires data.
I'll work in the dark with cold water as long as I can send those emails.
That's right.
Yeah, but maybe we could talk a little bit about the growth that we've seen of data centers in the ABS market. Right, and data centers are a very small subset of the overall ABS market, but I think what we've seen, and this is true with many emerging technologies, right, is typically the first investors, things like venture capital, private equity, but as that opportunity set has grown, we've seen other players step in, namely the asset-backed securities market. So maybe you could spend some time talking about how data centers play a role in the asset-backed securities market, and then maybe just what the ABS market is more broadly.
Yeah, a couple of things to unpack there. So maybe just taking a step back and talking about the ABS space. Year to date, $330 billion of new issue across approximately 600 deals, I think. That's a 20% increase from last year, where we saw approximately $280 billion of issue and less than 500 issues. So that's the ABS space. One of the aspects that's exciting to us at the DoubleLine and ABS is that the breadth of that space is continuing to grow. And so we're seeing nascent sectors like data centers continue to mature. And we're also seeing new sectors pop up. We saw a new issuer securitize IP addresses. We're seeing community solar. So these new sectors are coming up. And data centers is a sector that started in 2018. Had a handful of issues until the pandemic, and then it really took off with the pandemic. Year to date for ABS, $9 billion issued, total size of the market approximately $25 billion. So as you said, a relatively small component of the ABS sector, but growing. And what's interesting, I was looking at those data, $9 billion for the year is not unlike some of the more mature sectors in ABS. Student loans was $9 billion year to date this year. Credit cards are $20 billion. So it's emerging as a really solid, important component of ABS.
So we talked a little about the size and the growth of the data center subsector of the ABS market. Maybe we could talk a little bit about the structure, right? And a lot of what we do here at DoubleLine is in securitized products. And we typically like securitized products because these assets are generally cash flowing in nature, and the deals are typically tranched out, right? Meaning you can pick where in the capital structure you want to take that risk. So as it relates to data center ABS, is that a similar dynamic, right? Can you maybe talk a little bit about the structure of the data center ABS?
It's hard to talk about the typical structure because every deal is unique. But what we see in data center land is we see a Class A that's A rated, and sometimes we see a Class B, triple B rated, and a Class C from time to time that's below investment grade, double B rated. And so to your point, we can pick and choose which part of the capital stack we like. Just quickly in terms of spreads, what we're seeing currently is that the A rated tranches mid 100 spread, the triple B rated tranches are mid 200s, and the below investment grade tranches are high 400.
And you talk a lot about the spread, right? But maybe for the end investor, right? A lot of times they'll look at yield, right? So when you say spread of kind of 100 over or mid 100s over, pricing off probably the 5-year part of the treasury curve, that would equate to an all-in yield of maybe mid-single digits, 5 to 6%. And then for some of those more mezz or junior tranches that have that spread between, call it 200 and 400, maybe a yield in the high single digits. Does that sound about right?
Yep.
So an attractive opportunity in today's environment, right?
Yeah, exactly. We like them when we like the space. We continue to look at the space, and we'll see. It's interesting. I think I mentioned this year was $9 billion record issuance for ABS data centers. We expect another strong year next year, but at the same time, we're going to also see that constraint on the supply side, right?
Mm-hmm.
So we'll see where it goes.
Maybe talk a little bit about the current industry dynamics, right? What's driving some of these trends, or what's transpiring in the data center ABS sector?
We're seeing basically the beginning of structural undersupply in the data center industry, and that's because the demand is insatiable. It's doubled in the last couple of years. It's expected to double again by 2030. And on the other hand, you have supply constraints, right? You can't just build at data centers because you have, in particular, several challenges, but big challenges in power access and grid connectivity.
Yeah, like you said, data centers aren't just popping up willy-nilly on every block, right? They're very large buildings, and they require a lot of power and infrastructure to make them as efficient as possible, and to make the applications that we use on a day-to-day basis again really efficient. But I think too, something that we were talking a little bit off camera was just the differences in computing power that it takes for a Google search versus a ChatGPT search, for example.
Yeah.
So maybe you could talk a little bit about those dynamics.
Yeah. I think what's remarkable is people don't realize sometimes the inadvertent use of data. A standard Google search uses X amount of compute power, but if you do a AI search or AI powered search, Google has Gemini that uses between 10 and 30 times as much compute power. And if you think about it, if the population a year ago used traditional Google searches, and by 2024, Google's goal was that people use their Gemini application, right? That's a tremendous addition to data demand, which then translates to data center demand.
Yeah, I mean, as it relates to me personally, I know I would used to say if I didn't know an answer, let me just Google it. Now I say let me ChatGPT it.
Yeah.
And I think people might still use Google as their primary source, but over time I think you will see the adoption as people realize how powerful some of these larger language models and AI processing models are. How much more efficient you can be using those models and asking questions and the outputs you get from that versus just a traditional Google search.
Yeah, 100%.
Yeah, and I think sometimes we take what we do on a day-to-day basis for granted, right? Just sending text messages, right, or streaming, or even driving some of these newer cars that don't even have engines, right, but they're all just powered by computers. And it's not as easy as just saying, hey, let's build more data centers, right, to connect these different devices. But it's a whole ecosystem, right, that goes into powering, cooling, right, supplying the energy, right, and at the end of the day, making sure those applications run to the most efficient, ways that they can. So maybe lastly, concluding here, I know I asked at the top of this conversation, talk a little bit about the investment opportunity. From the portfolio management side, what are you seeing in terms of, right, the investable universe, right, or the opportunity set for data center ABS?
Yeah, I think that's a great question to wrap up on, because these dynamics are interesting, right? But so what is the question for our clients, right? And I think the so what is very important, because we're seeing a attractive investment opportunity in data centers, and I should specify in the data centers that we invest in on the ABS space are stabilized data centers that have they're built, they're installed, they're hooked up, and they have tenants using them, paying rent. So that's what we refer to stabilized data center. Given the structural undersupply that we are seeing, and we're gonna continue to see because of the bottlenecks we just discussed, we think that it's a very attractive risk-adjusted credit proposition. Like I said earlier, we're seeing single A rated data center investment opportunities in mid-100 spreads, triple B mid-200 spreads. And I think that's just a very attractive risk-adjusted proposition. The fact is that tenants in data centers are sticky to begin with, because all the servers, all the routers are their infrastructure. It's very hard to move tens, sometimes hundreds of millions of dollars in equipment, take it away from one data center, move it to the other, because the other data center is providing better pricing. It's difficult to do that to begin with. But even if you wanted to do that, there's just not enough space right now, not enough access to data centers, right? We have in the white paper, we have an interesting chart that shows that although data center capacity has doubled in the last couple of years, still though vacancy rates have dropped to historical lows and rents are going up, right? So that just tells you a little bit, like you put all that together, it tells you a little bit about the situation in the industry. So what does that mean? Is that I think that the tenants are going to continue to be sticky, rents are going to continue to go up, vacancy rates are low, and so it tells a good credit story for an investor in a stabilized data center. And there where we see junior tranches or mezz tranches, we like those particularly well because of the dynamics that I mentioned, right? Those cash flows are very predictable, they're pretty stable, and so we feel that it's an attractive investment opportunity. I would say not every data center is made equal. I've been seeing data centers, going to data centers for now not quite 10 years, but maybe 7-8 years. And there's differences in data centers, data center operation, data center location, connectivity, et cetera, et cetera. So it's important to know the differences, but by and large, as a whole, it's a good, attractive sector with good compelling opportunities.
Well, Stephan, thank you for joining. I thought this was a very great conversation. Clearly, you're very passionate about data centers in ABS, so thank you for joining the show today. For our viewers that want to learn more about data center ABS or just DoubleLine's thoughts on the markets in general, please visit doubleline.com or email us at info@doubleline.com. Thank you all for tuning in. From all of us here at DoubleLine, we wish you all a happy holiday and hope you and your families have a happy and healthy new year. Thanks again.